Here we have the 2-hour price chart for Super Microcomputer Incorporated, stock ticker SMCI. Here we can see that the stock is kind of struggling to maintain some upward price movements here. We've got a bit of downside activity. If we look at the prior highs that were established, this would be June 20th, when the highs came in at just above 1,000. This is just above $1,015. We have seen some downside declines here, and we have also seen a break of the uptrend price channel that had formed during previous sessions. So, overall, this kind of set the stock on some negative footing because the momentum reading in the relative strength index broke its positive uptrend. So, what this really suggests here is that the momentum level, the level of momentum that's seen in the stock is starting to break. The prior trend was positive, and that trend is starting to break. So currently, it's left a bit directionless because we're trading roughly near the midpoint of the histogram. This purple line here and is the relative strength index itself. The yellow line is a moving average of the relative strength index. And currently, we're hovering right near the midpoint. I mean, we're just above 51. So this is on a 100 scale. So, we're trading just above 51, which is, so what that really tells us is that we're currently trading in somewhat neutral territory as far as the indicator reading is concerned. We do have to remember that tomorrow markets are closed for the July 4th holiday. This does tend to affect volatility in the market because liquidity levels are much different during these holiday trading weeks. People start to pull their money out of the market, and that can increase volatility in stocks because there's just less money to kind of calm things down and to kind of stunt volatile price moves because there are still many orders that are still out there in both directions. Once people start removing those orders, share price activity can really start to get more volatile. And when we're dealing with a stock like Super Microcomputer, that can have a major effect. Anybody that is familiar with the price history of this stock knows full well. We can just kind of pull out here. I mean, most of the volatility has been seen in the positive direction. But if we look at instances like back here, we can see this would be just the earlier parts of this year, February 15. We saw some very significant moves to the downside. There are lots of price gaps in here. This stock history has been very volatile. We've got another pretty negative trading period. When we look at April 17th, we started to see some significant declines. So overall, it's undoubted. There's no question that the trend here has been positive, but it's been a bit of a rocky road to get here. You're swimming in the deep end of the pool here. This is really not a stock for inexperienced traders. It's very easy to get caught in the wrong direction with some of these volatile price moves. Even if you're long the stock, it doesn't necessarily mean that you're capturing gains when you've got a price history like this. So, when we look at the current context, it would not be surprising at all to see this continue into the end of this week. During the July 4th, we've got the holiday trading period, and then when we come back on Friday, the non-farm payrolls report will be released before the market opens. So you can be very certain that this is going to inject new volatility into the market and probably into this stock, because you're already dealing with light trading conditions. Many people take their money out of the market. And then when you come back into the market, you've got this major piece of economic data that is going to change, the current interest rate outlook one way or another. It's going to give us some information about how interest rates are likely to go up or down, in the coming months. What interest rate policy is likely to develop from here. So, almost always the non-farm payrolls report does influence volatility, and I would expect that to be even more true this week, and be even more true for this stock in particular. So, normally I wouldn't be pointing as much to the non-farm payrolls report, but you do have to take into consideration the fact that we're coming back right from a holiday trading period. There's not as much money, not as much money currently active in the market, and then you've got this sort of sideways condition happening, where the trend momentum in the stock itself is really trading sideways. So it's a bit directionless, and it really can be pushed in both directions quite far without reaching extreme levels. So as I said, we're currently trading at roughly 51 in the relative strength index. So what this really means is that you've got a lot of room to the top side and a lot of room to the bottom here, which shows that prices can move quite far in both directions without reaching extreme levels. So what does that mean? It means that it creates a picture of volatility that could occur in the stock into the final parts of this week. Overall, even on the shorter term basis, my bias here is still to the top side for the most part. As long as we continue with this kind of modest uptrend here, showing higher lows. To me, higher lows tend to be more important than higher highs because that's where you're really basing. That's where the stock is really basing. And I'm generally more concerned with that than I am with posting new all-time highs and things like that. So even though there is some negative signal information here, I'm still viewing this as a modest uptrend. Even in spite of the fact that we did lose our prior bullish momentum reading, and we also lost this short-term price pattern, which was this ascending price channel that did result in new short-term highs for the stock. As we can see here, I've been calling this a false breakout. This price spike here, as we can see, the price did jump to this would be the June 20 high, which came in. This is the 1015 price spike. I've been calling that a false breakout because, as you can see, we did sort of collapse here a bit on a shorter term basis. So, the loss of this uptrend channel was actually significant. It might look like a small price pattern here, but we did see fairly significant declines from there. But fortunately, we were able to catch those declines with this ascending uptrend line that has been in place since the second half of April. So overall, to the downside, what we're looking at for potential support levels, we're expecting support to start to develop at roughly 775.80 to the downside. So that's kind of your price target to the downside, or the extreme movement to the downside. And then the upper price movement is this 1015 level, which will need to be broken on a convincing basis in order to reinvigorate the uptrend. I would really need to see an hourly close at the minimum above this 1015 level to really start to get bullish on this stock. Currently, we're in a bit of a no man's land here, and we could see volatility increase into the end of this week. So here's the current market analysis for Supermicro Computer Incorporated, stock ticker SMCI.